Good morning, welcome to all traders on this Tuesday, the 4th of August. We have seen that the Aussie dollar stayed positive above 71 cents on the back of the RBA's decision to keep interest rates on hold. We're looking closely at the moment at the state of Victoria. They've announced that the industry shutdown is to throw 1 in 7 workers out of employment. And they've also declared a 5,000 on-the-spot fine for residents of Victoria, which shows how serious the country is about keeping the virus contained. So it doesn't affect any more or any further parts of Australia. We've seen yesterday that the manufacturing data was positive. This has shifted sentiment towards the dollar, which has taken the edge off some of the safe havens, which we'll look at shortly. So we're going to take a quick look at the Aussie dollar with the help of the Ichimoku cloud. So we're looking on the daily charts at the moment. We've seen a very strong bias on the upside. It's found a little bit of resistance at the Tenkan line, which indicates there could be a slowdown on the momentum on the upside. As we can see on the momentum indicator, there is a bit of divergence, which could indicate that, like I said, it's going to move on the downside. But overall, if we keep trading above the cloud as we have been doing, and above the Kijun, and it looks like going around the Tenkan convergence area, then we could look for a stronger upside in the long term. If we pull that down on the 4-hour chart, however, so looking at the 4-hour chart now, we can see a nice support line here for where it's tried to make a small break on the downside. It's tested it once, it's tested it twice again, so we could see, if it stays in this cloud, we could see another attempt at the 70 area. However, if we stay trading below the crossover, it does indicate that there's going to be a bit of a breakout again. If it falls into the cloud, then we could see levels coming down to below the 70 cent. So if it does fall below this position, then a sell position is likely. So I will be keeping a close eye on that as well. If we move on to the dollar yen now, on the daily charts, we can see since COVID started to recover after COVID, we've seen a bit of a test here at the moment at the 104 line. So just draw a Fibonacci from the lowest to the highest. We can see that if we just zoom in there. So from the end of last month, we can see the dollar yen substantially falling. And then from the beginning of the month, which is the end of last week, we can see a very strong push on the upside for the dollar yen. So this is what we spoke about earlier, about the sentiment changing on the safe havens. So we're looking that it's now trading in between both the Tenkan and the Kijun period. So if we see a break on the upside and it moves into the cloud, we could see a very strong indication of upside bias. Again, the momentum indicator is hinting at another divergence. If we take a look on the 4-hour chart, just to confirm that, so just put a Fibonacci in from the lowest point where we found support up to the highest point. So we see a little bit of a convergence line there. So it's trading in the cloud at the moment, which indicates that we could see it fall downwards. This is a very good indication on the 50% at the 105.35. So this will be a very good indication of a buy position that I will be keeping an eye on, because if it does get down to this period at the 105.33, we could see it push back up into the cloud and then have a very strong bullish bias on the upside. So this is what I'll be looking at as going forward. And once we enter the cloud, it appears that it will keep pushing up onto the next level, which is the 106.40, and then it will be tested again on the resistance that we have noticed since the beginning of the trading week. Okay, thank you for joining me today, and until next time, have a good day. Bye bye for now.